Hello guys, welcome to a video from Rise Capital. Today I will be speaking about the most simple and consistent ICT trading strategy, okay? When I say the most simple, I do not mean it's easy, okay? I'm just saying that there will be set rules to follow which may make it a simple strategy for you. That's all I can say, because there will be rules to follow. You'll know what to do. If it forms, you'll take it. If it doesn't form, you don't take a trade. Okay, it's simple. Okay, it's consistent because you could find it a few times a week if you do actually look into your charts and do your own back testing, your own forward testing, etc., etc. And I did actually take this trade example live. I'll be showing you guys, obviously, and I'm doing this in replay mode. I never really do anything in replay mode. However, just for this case, because it's a trade I took, I'm not doing anything in hindsight. Okay, all the trade executions, obviously the proof, can be seen in the description below on my Instagram and in my Telegram channel in the description below. Okay, so yeah, let's get straight into it. So firstly, I'm going to be explaining and showing an example of something simple, right? Just normal market structure. If we just go, so we've got this high. Let's say we're bullish, yeah. On the daily, we're bullish. On the 15-minute, we're bullish. 4-hour bullish. 1 hour bullish. Then just hear me out. Let's say we're overall bullish, right? And the market's doing something like this, okay? And overall we're bearish, so the market's doing something like this. Okay? So we've got higher highs, higher lows, higher highs, higher lows, higher highs, etc. Lower lows, lower highs, lower lows, lower highs, lower lows, etc., etc. Simple stuff, okay? Now, you want to see a liquidity sweep before entering a trade. This will be from 2 to 5 a.m. London time. Obviously, no, I said that wrong. 2 to 5 a.m. New York time, okay? Which will be 7 to 10 a.m. London time, okay? So, let me just put it here. Yeah? We have a border as well, put that as black. So, the time, 2 to 5 a.m. New York local time, 7 to 10 a.m. UK time, okay? And obviously everything, it can be changed here to New York time, okay? So yeah, sorry about that, don't know what that was, but yeah. So you want to see a liquidity sweep, and the liquidity sweep could be a swing low. Why? Let me explain to you. So as you know, this swing low has buyers, of course, etc., etc. So what the market want to do is come down here, okay? Why? Let me give you a big and main reason why. Because below this low, there are actually sell orders. If you didn't know, there are actually sell orders that are predicting, and there's retail traders predicting that the market's going to go further down, okay? Because we've broke structure. When in reality, that's not the case. The market's just observing all of these sell orders, okay? All these sell stops before actually going up, okay? Now, another point is buyers also have their stop loss jammed here, okay? Why? Let's say there's buyers here, they trail their stop loss here, they trail their stop loss here. Here, the market takes them out, and it takes these buyers out, okay? Doesn't mean these buyers lose money if you're buying here or here. It means they're out of the markets now, okay? However, there's also buyers here, so the market's taking them. What we want to be doing is getting involved somewhere here on the lower time frame for this more expansion, this further expansion, okay? And obviously, I've done this with a bearish scenario, so imagine it was something like this. So a sweeping liquidity here, a push up, absorb all these buy stops and take out these stop loss, and then get a push down, okay? And I got involved somewhere here on the low time frame, okay? So enough speaking, let's go into the actual charts and actually check this out. Okay, so cool. So we just want to mark out 2 to 5 a.m. New York local time, and we just want to wait till then. Okay. So obviously now we're in the London kill zone. That's what it is. 2 to 5 a.m. by the way is the London kill zone. And then now what's the obvious level of liquidity we want to sweep? So obviously we're overall bearish. On the daily we're moving quite bearish. 50-minute. I don't want to go on the daily because it ruins the bar replay mode. But obviously you can see how bearish we're moving right now. And I believe on the daily there was a high time frame, certain point, key level where I expect the price to go as well. So yeah, that adds extra confluence. But for now, let's just keep it simple. So this swing high, so obviously this swing high created this swing low over here. Okay, so obviously back to what I was drawing earlier, low, and obviously you got this high, low, high, low, and we can see that, and obviously we can see that over here. How? So we've got this low, this could be the low, and then this high could be this high, and then this low could be this low, and then this high could be this high, and then this low. And now what did we expect to happen? We expected this to get taken and for price to do something like this, absorb all these buy orders and take out these sell stops, and then what? It further moved down. Okay, so let's see what actually happened. Let's see what actually happened. Okay, so we've got this high, and let's just put this forward. Okay, cool. So now you see that we've swept it, right? We've now see it's been swept. Okay, so what we want to do, remember how I was saying go down to the low time frame and find the entry, go down to the 1 minute, and let's see what happens. Okay, cool. So you can see this high gets taken out with this line of over here, and if I just mark out liquidity swept, and of course we've got a liquidity sweep here. And then now what do we want to see? We want to see confirmation to actually sell, because we're not just going to sell blindly, are we? And what's our confirmation? Well, we have to wait for a market structure shift. What's a market structure shift? If price is moving up like this, and we break a swing low that created a swing high, this here, that here is our market structure shift. Okay, so where do we see that? So where's our new high created? This high is created, yeah? How? From this is our most previous high, and we created a new high here. Now, what was the lowest point before making this high? Here, isn't it? So it's our market structure shift. So if we just mark that out as market structure shift, okay, because the market has now shifted to the other side. Okay, the structure has shifted. Okay, so now what I want to see is some sort of return to a fair value gap or something. However, we can see this fair value gap has been mitigated. There's one here that hasn't been mitigated. However, I want to be doing it in a premium at a 50% level. Okay, above 50% level. And of course, this fair value gap isn't in a premium. I want to be doing it anything above here. If you can see this line 09797, I'm going to be doing it anywhere above here, so I'll wait. Okay, so I'll wait for more move, and let's see what the market gives us. Okay, ideally for extra confirmation, if you want to be safe, you wait for extra break of structure. So if a new high gets created, then a new low. Okay, so cool, we had this huge push up, which was actually Euro USD news at 3 a.m. New York local time. Okay, and now what I want to see is a break of structure. Okay, obviously now look, we're creating a swing high here, and then the market comes below here, then cool. Now what's this called? A break of structure. A break of structure is essentially just a continuation in the trend. I don't like saying that, but that's essentially what it is. And now I want to be looking for sells. in this price range. Okay, so there's this fair value gap. Okay, so we've got this fair value gap here, and then we had this fair value gap too, and obviously price just touches it. But remember what I said about it being, I'm not going to do it from this high, because obviously that's news. I don't really like using big wicks. And if you can see here, this fair value gap wasn't even in 50%, so why would I take sales in here? I would like to take sales there, okay? But essentially, if this comes further down, I like this to be returned to, even though it's been tapped in, okay? Cool, we get more push down, okay, cool. So now let's see where is our 50% level, our premium. So cool, now this fair value gap isn't premium, just a bit above it, okay? And then cool, so now we're above 50%, now we're in premium, okay? So ideally we could take sales off this fair value gap. However, I like being safe, okay? So I'm going to take my sales just from here, put my stop loss above this fair value gap wick. And for those that don't know, fair value gap is literally 3 consecutive candles. So a bearish fair value gap is 3 consecutive candles where there's a gap, okay? So this candle, this is our first candle, second candle, third candle. The bottom of the first candle, draw that all the way to the third candle's high, if that makes sense, okay? And what you can see here is there was just sellers, okay? It's inefficient price action. It was just sellers. Here, just sellers. So what does price need to do? Because at every instance, at every time in the market, there needs to be buyers and sellers together at the same time, okay? So what price needs to do is come back here to reprice, then continue to go down, okay? So that's what it is essentially. It's inefficient price action. There was only sellers involved at this area, this small area, okay? And of course there needs to be buyers too. So yeah, so my stop loss will be at this wicks high, and my take profit, of course, it's an easy level. It was just a bit below here, okay? And let's see what happens, okay? Of course we could even target this fair value gap, because we know that we can target fair value gaps, and even this low, because if we're overall bearish, we know that we could create new lows, okay? So let's just see what happens. Cool, we get a push. We actually do get a push into this fair value gap over here. I believe we did touch it, yeah. You can see how we're respecting it right now with the wicks. See how we're respecting it by the wicks, and it's just staying in this area, the bodies, okay? And then, of course, we hit TP easily. Now, everyone's saying, what's that? What's a 12 pip trade? What's 1.6R? Well, I'll tell you what 1.6R. 100k account, 1.6R, risk 1%. That's $1,600. Okay, that's a lot. And don't be fooled by these 5 or 10R traders, 15R traders, because they have a lot. They have a lot of hit and misses before they get that one trade. Now, this is professional. This is mechanical. This you have rules to follow. Okay, this was done in a certain time, on a certain time frame. And yeah, think about 2 of these trades a week and you're set on a high funded account, okay? Of course, we could also target it here and got more, but I always like being safe, like I said, okay? Of course, if we just go down, obviously we just smoke through these levels, okay? 1.6R, more than enough. Don't be fooled. 1.6R is more than enough, okay? Get that in your heads. I like aiming for 1R, 2R, 3R, okay? If I get more, that's fine, but only if it's reasonable, okay? And obviously, proof of execution will be linked below. It's on my Instagram, on my Telegram channel. You can obviously find it and follow my Instagram. It will be in the description. And yeah, I hope this was insightful. Until next time, take care.